This is the brief on the August 26th daily financial market landscape. Today's brief is a high-stakes collision of stubborn inflation, shifting global oil routes, and a massive tech earnings report that could literally make or break the stock market. First, let's look at our macro problem. Inflation is still running too hot at 3.7% year over year, while the economy only grew at a sluggish 1.5% in the second quarter. And with the 10-year Treasury yield sitting around 4.64%, which is basically the price tag on long-term money, mortgages and big loans are still incredibly expensive. It really makes you wonder, is the Federal Reserve just stuck between the rock of rising prices and the hard place of a slowing economy? Well, second, we're actually seeing a sudden relief valve. Brent crude oil dropped 3% to around $86 a barrel because Iran and Oman are discussing ways to restore shipping through the Strait of Hormuz. So how exactly does a shipping lane in the Middle East lower our inflation pressure and treasury yields? It's simple. Cheaper transit means cheaper gas, which lowers the cost of moving goods everywhere. Finally, we've got our wild card. Contrast that cooling oil with the boiling hot AI sector. NVIDIA reports earnings tonight, with Wall Street expecting a staggering $92 billion in quarterly revenue, nearly double from last year. Because they supply the core computing power for AI, this report's going to dictate the broader S&P 500. But is buying NVIDIA today like betting your mortgage on a single roulette spin? Honestly, grabbing a diversified tech ETF like SPY or QQQ is a way smarter way to get AI exposure without the crazy gamble. So don't bet everything on tonight's earnings. Prioritize emergency savings over expensive loans, and just build a portfolio that survives regardless of what happens.